Well, hello everyone. Welcome to Trading a Smaller Account. This is the Friday. We're wrapping up another really full and interesting week in the markets. Can we say that? Today is going to be brought to you by the number 5. And what do I mean by that? Well, I mean that we have 5 trades that have hit either targets or sadly exits in the past week. And the interesting thing about these 5 trades is that they represent 5 different trading strategies. And then when I looked at example trades for today, I looked at least 5. You know me, I've always got a long list. But again, when I started saying, well, we could do this or we could do that, it looks like, 5 additional trading strategies. They're not all different from the ones that we got out of. But we're looking at lots of different opportunities and lots of different trading strategies. So I hope you guys are buckled up and ready to go because we have a lot to cover in this intermediate level class. My name is Barbara Armstrong. I'm a coach and a senior manager with Charles Schwab. We have the privilege of having Mr. Mike Fairborn with us in the chat. He's a friend and a fellow coach and understands all of these strategies. So if you've got questions, don't hesitate to ask. If you're watching this in the archives, as the majority of people do, know that you too have a right to ask questions or throw in your opinion on things. And so you can just type that into the comment section below, and I do check those on the daily. And I want to thank, especially the usual suspects who come rain or shine and show up to every single one of these classes. So like to Paul and TM and Dominique and Will and Josh and Sharon and Kevin and Bill and Frank and the rest of the gang, Debbie, and we've got people from Hawaii, from Texas, from California, like from all over the country. And we even have a few of Canadians here today, may I say, other than myself. So, Canada, we're glad you're here. If you're not following us on X, consider this your formal invitation at Armstrong CS. And Mike is at Mike Fairborn CS. Now, just as we get rolling, a reminder that options carry a high level of risk and aren't suitable for all investors. We use the paper money software application on the thinkorswim desktop platform. Say that 3 times fast, but it is a brilliant place to learn. There are some nuances and differences between paper money and your live account. One is that short options will never be assigned early in paper money. But you know what? We can discuss that. So we do still get to address that. We just know that in paper money, we're not going to be called out. So we do a super quick market overview. We manage some existing trades or review some of our existing positions. We meet every Monday and Friday. So if you're watching this in the archives, you'd like to join us live, we meet at high noon Eastern, and then we're going to place, our goal is to place 5 new trades today also. So we got a lot to do. That's why my sleeves are rolled up. So we're going to start with the S&P. So, when we look at this and, if we back things up and look at the last year, I mean, we did have a pullback here of over 10%, which put us into correction territory. I did record a short video today on how to add scripts to charts, and I guess we can get rid of these now, but I am asked a lot. So I'll leave them up. They're just going to show on the SPX chart and the NDX chart. So, because I get asked a lot, like, how do you add this script? And so you just take this LJYKFC3, come to setup, open shared item, and type it in, and then import it, give it a name, that makes sense to you. And the same thing if you want to customize this, your watch list here. There are 2 scripts that I use, and this is what they are. But back to our regular programming, we had over a 10% correction here. But if we look at the last 12 months and we show price as a percentage, we're still up almost 30% in the last 12 months. See that number there, 29.43. So, even with this 10% pullback, and then we've seen like this huge move to the upside today, pulling back a little. And, this move, if we measure it, I'm going to come from the top. It's 7% in just a few trading days, in 9 trading days. So we've had a big move to the upside. And when we look at the NASDAQ, and right now it's kind of a politically driven market. The market's been responding to a lot of what's been happening with the Strait of Hormuz and similar type of chart, right? And when we look at our small caps, once again, variations on a theme here. Same thing with the Dow. And, are we surprised? Now, this could be just a big fat bear flag, but, others might say, well, but we came up, we pulled back and moved back again. So, we could be entering a consolidation phase. This could be a big V pattern, and we'll just have to wait to see how this all plays out. And our VIX, we're now back down to 20, and just it seemed like the day before yesterday, and really it was a couple of weeks ago, we were up here around 30. So things are kind of calming down a bit. Okay. So, and then if we look at our sectors, and the reason I have materials up, spoiler alert, if we come down to public and look at sector indices, and by the way, I recorded a little video. You'll see it on X in an hour or so on just like how to see what, analysts upgrades and downgrades. But if we look at the last 4 weeks here, who's been in the worst shape? Staples and healthcare in the last 4 weeks, but who's been in the best shape? Materials, like who has moved the most to the upside? Materials, utilities, and financials are all of a sudden seeing a little love. And then industrials. And if we look at the last 3 months, who's been leading the pack? Energy still, even though, once the ceasefire was announced, we saw a big pullback in energy, but utilities and materials still shining pretty bright. Okay. Somebody asked, if some ETFs, I can't discuss ETFs in this class, but that would be a great class to ask on the Trader Talks on Friday mornings, where the whole conversation is about ETFs. There's also a class on Monday afternoons with Rachel, so you can check that. Okay, so somebody is saying that they are brand new to trading. And so I applaud you for being here. I will warn you, this class can be a bit like drinking out of a fire hose when you first start, because I'm assuming that you understand these strategies. And so if you don't, it can be, I move very quickly. And so you may want to go back and watch the recording. You may want to join me on Tuesdays for getting started with technical analysis. There's also a getting started with options on Tuesdays. There's a getting started with stock investing on Wednesdays. So there's a lot of getting started classes you can tap into. So I'm going to go over these very quickly, the trades that we got out of just since Monday. So one is Cisco. So Cisco, and we're going to snug up here, come in a little more up close and personal. So Cisco on the 6th, we placed a long call trade, and the target was a 1 ATR target, and it hit that, 2 days later. And when we come to the monitor tab and come to account statement, and we look at Cisco, and I'm not going to, meticulously go through every single one of these and all the details, but if you take our 350 and subtract our 241, so got my little drawing tool here, that gives us a profit of 109. And now this is not taking commissions into account, because it was 65 to get in and 65 to get out. And then we did 2 contracts, so that was times 2. So we made 218 on this. And this is what we call a base hit. We followed our rules, so we're happy campers. We made a little money. So, check. And our goal is to make in this class, our original goal was to average 100 a week. We've already met that goal because we started at 25,000, and this is paper money. So, you got to keep that in mind. And our return on risk, if we take our $1.09 and divide that by our 241, which we could have lost all of it, was a 45% return on our risk. Okay, so this is kind of how we go through the math to calculate these things. Okay, so now I'm going to wipe our little slate clean. And we'll look at door number 2, which was NBIS. So NBIS, we also placed this trade on the 6th. And we did a long call vertical out to May. And so we were giving it some time. But this thing just took off like a rocket ship. And we put in a target to make 50%. And in fact, we got out with a 56% return on that one, NBIS. And so again, we'd take our 390 that we made, we'd subtract our 245. So we ended up with that with $1.45 we made times 2. So we made $290 on that. So that was another base hit, and just it was over a 50% return on our risk, because again, we were buying something here, so we could have lost all of it. We've been doing some iron condors, and we did a couple on NVIDIA, but we finally got out of this one on UNH. And you may go like, ooh, did you lose on this side and lose on this side? Because with an iron condor, it's a credit spread sandwich where we were expecting the stock to stay below 295 and above 265. So when it came down and we had this candle pattern that said, hey, this pullback may now be complete. This is called a bullish Harami pattern. We closed out the short call side. And then when it came up here and then ended up gapping up, then it hit our target and we got out for, I think, a better than expected return here. So we actually legged out of this. And the net of it on UNH, so we put the trade in, all as one. Here, we were paid $2.50 for it. And then we bought back the call side for 34 cents and the put side for 19. So our net gain on that was $1.94. And how much were we risking? Well, the difference between the strikes was $5 minus 250. So that was our theoretical max loss. So our return on risk on that one turned out to be about 78%. Now that's it for the sunshine, my friends. But we managed this, and some would argue that we managed that well. Now let's look at APA. So on Monday, so we put a lot of these trades on this week. On Monday, we saw this big bull flag, and this is what kind of stock? This is an energy stock. So we knew that we were, taking some risk in that it was an energy stock, right? So, but we said, hey, we are going to buy a covered call. We're going to buy the stock. And on this one, we sold a covered call at, I believe it was at 45. So we can just put that on the chart. Whoops. Whoopsie. So we had this covered call at 45. And so this was our buy right covered call. And I really wanted to show you this one because you know how we always say, like, hey, just because you put a stop in it doesn't mean you're necessarily going to get out at that price and blah, blah, blah. Well, it's not blah, blah, blah. It's a reality because our stop was at 39.16. And the next day, like when this gap down, this is where it opened. It opened on this day at 36.98. We got out at 37.30. So we got out, almost $2 lower than, where we ideally wanted to exit. But if we go back and look at this, so this was a trade that did not make us money. We lost money on this trade. But did we follow our rules? Did we have an exit in place? We did. And then, you know, when they say, whoever they are, okay, I say, you know, this, you know, selling the covered call can help like mute a little bit of the pain. Well, we bought it back for 15 cents and we sold it for 78. So, you know, that took $63 worth of the pain away, but we were still down $463 on this, which was $200 more than we were intending, more or less. You know, but it's still in this class, we don't want to risk more than 500 to maybe 550 on any one position. And so we were still, you know, it was a flesh wound, but we didn't, you know, we didn't blow up our account. Now, the last one is Palantir. And this one, you know, people laugh at me for my crazy expressions. And, you know, when I say like, well, wouldn't that just frost your petunias? Well, this trade just frosted my petunias because we're looking at Palantir and it's been downtrending, right? Right. So it came down here. And on this day, we said, our expectation is that this could continue to fall. And we're not going to put in a target all the way down here. We're just going to do a 1 ATR target. So we probably put this one in earlier in the day. And this was our target, 133.38. But the way these are managed is if it doesn't hit that target, you go up at the end of the next day. And because this one's over 100 and below 200, we would move the stop up to $1 above the close of that day to just tighten up the stop. So our stop went up to 148.86 and we got stopped out here. And then, you know, and if we hadn't been stopped out this day, we would have been stopped out this day because, you know, it opened here and then fell like a rock. So we were right in that this stock was going to continue to fall and did continue to fall. But in managing our position according to our trading plan, this one didn't work out. And we ended up down by $237 on this one. We had a 50% loss on this. And, you know, so you should you say, well, that's it, I'm not following my rules anymore. Well, no, like sometimes things just don't go according to plan. So the net of it after all that, you know, we were up almost $300 on NBIS. We were up over 200 on Cisco, almost 200 on UNIH. And by the time we took off the losses from Palantir and APA, you know, I don't know if we look at this week, we're at 31.2 and we started at 31.1. Like we're up just over $100. So it's kind of like the duck in the pond. You know, the duck looks so calm, but we're busy thrashing around underneath. Yeah. So there we go. So 5 trades, 3 of which were nicely profitable, and 2 of which managed to wipe out most of those profits. But there we go. We're still like, you know, before we start calling the caterers to have a pity party at 31.2, if we, let me just add a calculator. And again, this is paper money, 31,285. We started at 25,000. The thing that's frustrating is that by the middle of February, we were up, you know, 25% in this account, which is what we're up now year to date, which is still not bad, but we've done a lot of treading water in the last month and a half, even though we've had lots of winners. You know, there have been some that have, you know, they're on that trade gone wrong. Okay, we're going to spend the rest of our time on new trades. So the first one I looked at, because I've been keeping my eye on NVIDIA, and, you know, I get asked all the time, like, you know, how do we pick? And we've done a bunch of iron condors, well, a bunch, I think maybe 3 in the last 6 weeks, and they've worked out nicely. But when I look at this, we get almost nothing if we came back down to this 170 level, which is still like a nice level to sell the short put vertical. And we're still moving to the upside. So rather than, doing the short call vertical today, which if we came out, say we came out 21 days and we wanted to do the 170, 175. Oh, sorry. What's the top side on the video? 195. It's still moving to the upside. And so what we may want to do is look at this again Monday. So we get $1.67 for it, but what if it keeps on running and runs right through? So if we're going to look at a strategy where we're legging in, let's wait until it gets up here and then consider legging in there. Okay. And if we're trying to put the short put vertical side on today, we get so little for it, that one might argue, that it might not be worth doing. Okay, so CTVA. So Corteva, when we look at this, this has just been a nicely uptrending stock. It's up 25% year to date, and if you compare that to the benchmark, the S&P is up. Well, it's not up. We're basically flat on the year so far. So CTVA has been outperforming. If you're not familiar with this company, if we come to the Analyze tab, it's part of that materials sector. So if you're wondering how I found it, wonder no more. I looked at the sectors and said, hey, materials have been strong. Let's have a peek at the stocks in that sector. And then when we come in and look at this, we've got kind of this bull flag pattern. And today we've got a harami, happening, which is an inside day and is considered to be a complete candle pattern on its own. So could we do a long call vertical? And if we give it some time, because this is only monthlies, but when we look at this, we've got 500 contracts. We've got about a 50-cent bid-ask spread. So that's, kind of at the top end. And one of our rules is we want it to trade more than 1 million shares a day. But, we're a little light today, but like yesterday we were at 2.5 million. So it certainly on average trades more than 1 million shares a day. So we're going to look at the 80 and we're buying a vertical. So we want this to go above 85 and stay there. And we're paying 308. And although we often will put in a target of 450, when we have to pay this much, to take our 308 times $1.50, call it 3 times 1.5, that's 450. That's getting pretty close to max gain. So on this one, because we're paying over $3 for it, I mean, we could make $1.92 on this, but how about if we said, hey, if we were to go for a 25% gain on this, and we're looking at not being in this more than 35 days, then we'd be exiting at 385. So that's what we're going to do. How many contracts? We're only going to do one because 2 would have us risking over 600. Excuse me. So I'm going to create an opposite order. And we're going to say, hey, if and or when this is worth 385, let's take the money, cue Steve Miller. We're going to take the money and run. So, and that's our long, somehow my drop downs, I did a refresh last night. They installed some new software. So looks like I can't put this in, but we're going to say this is a 25% profit target. All right. Okay, so that's that one. Now let's go to Dow. Oops, TOW. I could spell. So again, here's another harami pattern where, this came down to the 30-day moving average. This is what this red line is. And, it's hit it once, twice, 3 times. and looks like it's bouncing. We do have earnings coming up. So we have earnings coming up on the 23rd. But could we do a swing trade with the stock? And what's the advantage of a swing trade with stock? Well, you could get stopped out. So we could end up losing it if we put our stop below the low of this day. That is still a possibility, but it gives us a little more time to get there if we need it. So we're going to put our target up here at 42, let's call it 42.50. And this is our stock target. And in this class, we can buy a position up to $5,000. And so we're looking at, we're going to just buy 100 shares. This is a stock that's currently trading at 38.82. We could buy 150. We could say, well, we're just doing this as a stock target. So if I take 5,000 and I divide that by 38.82, we could do that also. So we could buy 128. So we could buy 100. Let's make it 125. So we're going to come to the trade tab. We're going to right click. We're going to buy custom with an OCO bracket. We're going to make this 125 shares. And then if I click on this firecracker and turn it into a paper clip, when I click anywhere else on these order bars, it will line them all up. I'm going to make the exits good till canceled. We're going to put in our target here of, what was the target on this one? 42.50. And our exit is going to be at 35.03. $35.03. And so, if we go up, $3.65 we want out. And if it goes down, $3.82 we want out. Oh, well, now it'll let me put it in a group. So we're going to put this in our stocks with targets. And we're going to make a note that this is a swing target. Now, I just recorded a short video on how to add notes and then how to see notes once you've added them. So if that's a new thing for you, you can go to the trade management mini sessions. And that's a playlist. Let me just go to Trader Talk. So if you're new and you have not subscribed to the Trader Talks from Schwab Coaching, let me just bring this up here. Trader Talks. So when you first come in here, what you'll see is what's currently being taught. And then if we choose playlists and come down, there is a playlist dedicated to this class. So if you missed the class on Monday and you want to go back and rewatch that, you can do that. And then the trade management mini sessions are here. And so if you're new to technical analysis, there's a whole bunch of very short videos. They're 2 to 5 minutes long on different candlestick patterns. And then a lot of these trades that we're doing today, the long call vertical, here's an example trading plan. Short call vertical, we're going to do one of those. Here's an example trading plan. A stock investing plan, a buy right covered call, which is what we had done on APA. A long call with a 1 ATR target. That's going to be our next trade on Apple. So here's an example trading plan. And then if you're newer to thinkorswim or, might want to pick up a few tips that you may have missed, I'm just re-recording these now. They're kind of aging out, but they had between 25 and 30,000 views when I recorded them and just tucked them in here, and people just found them somehow and away we went. So that's just an additional resource that you can take advantage of if you're interested in. Okay. Okay. So coming back, that's Dow. Let's now look at Apple. An apple a day, you know what they say. Oh, well, now Apple was up And it's now, it's down, it's pretty flat, like it's down 20 cents. And this is a $260 stock, but it has been uptrending. And so maybe we just wait on this one and look at it again on Monday, because the plan on this one was to do a long call. So buy a call with the expectation that it might come up here to around this 268 level. And actually our target was going to be at 268. You know what, let's go ahead and put this one in, because what we're seeing, and this candle is still live, so it can change, is that it opened lower and it's still trading higher on the day, even though it's 15 cents shy of being higher than yesterday's close. But if this expectation is that it might come back up to around this level with one ATR, if I switch this to the scratch pad, so here is Apple, the one ATR, and if you're wondering what that means, it means this is the amount this stock has moved, on average over the last 14 days. And if we hover over this candle, we can see that's at 589. So our average movement from high to low is 589. And you can add that to your chart if you don't already have it by coming to edit studies and just click ATR or start typing it in, in the top, and then you add it, apply it, and hit OK. So that's how I've got that on there. Oh, this was another trade. Well, Cisco, we just reviewed that trade. Okay, so, and then our target is going to be today's high, and you just hover over the candle. Today's high is 262.19 plus 589. Okay, and so that, and feel free to check my math, because we all know my math skills are modest. And part of that whole pesky being a human being thing, it's possible to make mistakes. 259.07. And then if we subtract that, we're going to subtract 589. So if the trade doesn't go according to plan, we're going to be out 253.18. Now, how do we put that trade in? And so our target is going to be up here at 268.08. So I just draw a line and then edit it, because we're going to be looking at this daily, and not just because we're obsessive compulsive, or this trading plan, it necessitates that you look at it daily and adjust the stops daily. So that's on the right. So there's our target, is up close to this diagonal resistance line. Okay, so we're going to, because if this gets up to say 267.50, we might say, hey, you know what, that's close enough, especially if we get, an inverted hammer like this candle, which is called a shooting star when it's at a resistance level. So we're going to come to our trade tab. We're going to come out to May. And we can't do the first strike in the money or at the money, because when we buy a call, we could lose the entire amount. And our rules say we don't want to lose more than 500. So we're going to right click here. We're going to buy. Now we could do buy custom with OCO like we did on the stock trade, but we're going to say buy single. We're going to come to our single order, make it a first trigger sequence down here, right click, opposite order, and then we're going to make this a market order. This is just a different way of putting in an OCO order. And then this brings up this, and now I'm going to go in and put in my target, 268.08, 268.08, and my exit, 253.18. Save, confirm and send. And I want to make sure I've got both of those, 268, 268, below 253.18, below. Does that make sense? This is 260, that's above, that's below. Like, and you may say, like, is that a bit obsessive? Well, it's your money. you want to, human error is a real thing. And this is a note we put into ourselves that this is a 1 ATR target and, and exit. Okay. So we've reviewed 5 different trades, that we had placed. We've done 3 new trades, a long call with a 1 ATR target, a long call vertical, which is a bullish strategy, and then a swing trade. So those are all bullish. Now, what if we looked over on the bearish side of the street? Because in spite of, the resilience of the market and, the moves the last few days, when we look at Microsoft, this is a 6-month chart. Like, it has been on the struggle bus. And, it came down to this low. It looked like it might be bouncing. And then it went, yeah, no. Could we come up here and maybe do a short call vertical? Because when we really come in here, like, do you see this line here? Like around 373, it seems to, it had one day where it kind of went above. But could we sell something above that? Like at maybe 385? Like, could we get enough premium? Like, it might be worth looking at. And so if we come out to May, this is a very heavily traded stock, 13 million shares, lots of volume here. If I look at this 385, we've got like a 20-cent bid-ask spread, 30-cent, 95, yeah, 30-cent, which is, certainly acceptable. If we say, well, we want to sell a vertical, which means our expectation is that it's likely to stay below 385 for the next 3 weeks. And on Saturday and Sunday, when the market is closed, we're trying to take advantage of time decay. That works in our favor. And so if we say, okay, let's just get our calculator out and say, well, what are we risking? We're risking 340 to make 160. Okay. Well, if we do get to make that 160 and I divide it by 340, is there enough juice to make it worth the squeeze? And our kind of general guideline is, we're in this for 21 days. We want at least a 21% return on our risk. And we're getting potentially a 47% return. And so we're going to say to ourselves, you know what? If I get to the point where I've got 80% of my max gain, going to take my risk off the table. And so I am going to come in here, create an opposite order and say, hey, when this gets to the point where it's worth about 31 cents, I'd like to buy it back. And, we'll have made, if this works out, $1.27, which or $1.26, $126. Like, that's not beats a poke in the eye with a sharp stick, right? Like, that's a base hit. So how much could we lose? 338. How much could we make? 162. Are we okay with that? Yes, we are. So we're going to come and put it in our short call vertical. And I call these short verticals, like, this is kind of sort of bearish, and what do I mean by that? It's like, well, if this goes sideways, so I'm going to remove this and I'm going to change this because actually, you know what? I'm just going to remove this. And we're going to put in a new line here. And again, I'm not too particular, not too precise. I just draw the line and then come in and say, okay, this is a short call vertical at 385 and 390. And I forget the date. Let's see, 3 weeks from now, 1, 2, it's probably May 1st. I can correct that if I'm wrong on the date. So now I know it's trading at 371. So I have $14 worth of wiggle room, but my expectation is that it's going to stay below, in all likelihood. That's our calculation, our expectation. Okay, on Microsoft. And we could do something similar on CRM. Oh, You know, I just looked at the clock and we do not have a ton of time, my friends. So here's another one. Like it was, you know, it had a great fall and then it kind of consolidated and then it's breaking down again. So, you know, could we do that same kind of thing and say, it, you know, could this old floor, old support start acting as new resistance? And could we sell maybe the 175 and the 180, you know, and come out this 21 days? So it was May 1st. And again, heavily traded. And at $1.22, that's not quite as juicy as the other one, is it? 122 divided by, that would be 378. So that's $5 minus $1.16. So that would be a 32% return. And you might look at that and say, you know, maybe I'm not so keen on that, but if you decided to place that trade, again, we'd only do one contract, create an opposite order. And when that's worth about 24 cents, we'd want to buy it back. Now, are there other stocks that are moving bearishly? Absolutely. Now, we don't have time to place another trade, but if you wanted to go practice, you could look at Oracle. And Oracle was one where I was thinking we could do an example trade of maybe buying a put with a 1 ATR target. Now, it's rallied since I first looked at it, but it's hit a new 6-month low today. You know, so it's been on the struggle bus. And Nike was one of those stocks that had the privilege of getting downgraded again today, like as if they haven't had enough trouble. And it's moving to the downside also. So guys, we crammed a lot into our 45 minutes. We looked at the long call. We reviewed Cisco, NBIS, UNH, Palantir, and APA. And then we went and we placed new trades on a CTVA. We did a long call vertical. We did a stock trade with a swing target. We bought a call on Apple. And then when we look at our working orders, and if we go by time placed, you know, we're waiting for a fill, and I can go in and change these and I'll make sure they get filled. But short call verticals on Microsoft and CRM. Well, there went CRM. So we just have to wait for Microsoft. So we've done a lot. If you'd hit the like button today, it won. It sounds like applause to Mike and I, so we'd appreciate it. 2, it helps move things up in the algorithms on YouTube so that more people can find this content. There's also a survey in the chat. So here's the deal with the survey. If you click on that link, if you're with us live, you'll get 2 questions. And one was, I hated it, never coming back. And 10 is, I loved it, and you're now on my regular watch list. And then there's everything in between. And you can also put comments in. So my promise to you is if you fill it out, I'll read each and every comment. So will the management team. And, you know, let me know, did you like the pace? Are there strategies I haven't discussed lately that you'd like to see, you know, us do example trades on? You know, whatever you'd like to share, I'm happy to hear it. And we'll often base new classes, you know, upcoming classes on that. And then last but not least, follow Mike and I in the land of X, Mike Fairborn CS, Barb Armstrong CS. And I'm also now in the land of LinkedIn. So you can wander over and find me there. And that's a wrap for today. Get out there and hug someone you love. Have a really great weekend. Lots of great content still to come today. So stay tuned for what's coming up next. Bye for now.